Welcome. You've just joined ICRC-TV COVID HR Updates. My name is Pandy Pridemore, Principal Consultant and founder of the Human Resource USA. I'm glad you came back. And you know, we were just talking before the show. We've all agreed this whole topic of needs to go away. We're all on the same page. We've experienced it, so now we can say that we've been there, done that, and we all just want to move on. But you know, the dilemma is it's not going to let us for a while. And therefore, we're having to come back every week to keep you abreast on all the ever-changing updates and modifications and new thoughts and new processes and new policies. And until it ends, well, we're going to be here with you. I've got two new presenters here today. We've been going over a number of different topics. And again, you've been giving us wonderful, wonderful feedback and additional questions to ask. So I brought on two individuals that I think you're dearly going to love today. John Kirsch, founder and president of Kirsch Cpas here in the Cincinnati market. John was actually recommended to me. He came as a referral to me. Now, I've known of John forever. But someone looked at me the other day and said, hey, you know who you need to have on the show. He did this phenomenal presentation to our chamber, and you got to hear what he has to say. So John's here today as a favor, and he's going to help us better understand not only what he and his clients have experienced and learned from the past 5 months of this pandemic, but what he's working with his clients now to prepare for through the end and possibly beyond. And then we're going to be with Matt Schrockman. Matt is co-founder and president for Interlink, an absolutely dynamic and highly recognized IT company here in Cincinnati by a number of different organizations. And I really enjoyed getting to know Matt a little bit in terms of how he thinks and how innovative his whole team is in approaching all the different IT challenges having to do with the pandemic and so much more. So Matt's going to, again, give us some insight on things that we may have forgotten, may have not even thought about, and things that we need to take forward, again, as we move to the end of this pandemic. At the end of the show, of course, you know I'm going to do it. You know I'm going to inundate you with a whole bunch of updates because last week was not a quiet week. We have some things we got to talk about from an HR perspective. So if you're in charge of HR or if you have any influence on HR, get your pencils and papers out, as I've told you a million times over, because I don't want you to miss a thing of what we're about to talk about. So let's just get started. John, welcome to the show.
Thank you, Pandy. It is a pleasure to be here. I am thrilled to be part of the conversation. It certainly has been an interesting ride. The last 8.5 months dealing with COVID and a number of other things. And I'm just thrilled to be able to share some of our experience with your audience. And as you mentioned, most importantly, where do we go from here?
Well, and we have really put a lot of emphasis from day one, and we started these shows way back in March. So from day one, we have tried to tell our viewers, you need to surround yourself with absolute experts. You've got to have people who know more than you in these other disciplines beyond your business. And a good CPA was in the top 3. You could not go through these experiences without a good CPA. Am I right?
We would like to think so. And I think to your point about aligning with the right partners, that became abundantly clear over the last few months. I'm sure Matt would have similar experiences of prospects that maybe came to him that didn't get the type of service that they really needed when the crunch hit. And we certainly saw that with people calling us who maybe, and there were lots of situations, but the one that got the most press, of course, was the the infamous PPP loans. We never thought that those three letters would become part of the business vernacular, but here we are. And a lot of businesses that maybe hadn't aligned themselves with the right partners found themselves for a while on the short end of the stick. So the events of the recent events have certainly pointed for the need to align yourself with the right partners.
What kind of questions, when you even talk to maybe an existing client or a prospective client, what in your mind are the questions that they should be asking you, or the information that they should be challenging themselves to gather?
In the environment that we're in today, the questions that we're not hearing prospects ask the most are really geared towards their finance and liquidity, planning for what their situation might look like in Q1 and Q2 of next year. The significant part of our client base, I would suggest, is it's the bell-shaped curve. We certainly have some who, based on their circumstances and their strategic moves, are just knocking it out of the park. And we have some who, because of their circumstances, I mean, if you're a restaurant or a hotel right now, you can be as strategic as you want, and there's just not a whole lot to do about that. The majority of our clients would fit in that middle space where they're hanging in there. They're doing okay. The concern that we are pushing our clients to look for is, what do you have yourself in the position you need to be for 3 months, 6 months, 18 months from now? So those would be the questions I would suggest to your audience to challenge their advisors. Help me understand where I need to be in case this thing persists, which, we were joking about it. We were making a joke about it at the beginning, but the reality is this very well could be with us, and the attending financial ramifications, and having that liquidity to be able to weather that storm and come out on the other side and still be a viable organization.
Yeah, John, I couldn't agree more with you. We're seeing that bifurcation of businesses right now. The ones that are playing offense and the ones that are playing defense, to your exact point right now, especially with technology. Are they making the investments they need to make? Are they making investments in people? Are they making investments in process? Some are, some aren't. And unfortunately, the ones that aren't making those investments now, I think are going to get hit twice. They're getting hit by this impacting us today, and they're going to hit by the fact they don't have the right tools and technology in the future again.
And to that point with Matt, and I'd be really curious to hear his. I'm sure he'll have a take on it, but the entire discussion about remote workforce and what that needs to look like. Our organization has supported remote work arrangements for 20 years, and I'm sure Matt can attest that it's a little bit easier to have a remote workforce today than it was 20 years ago. We had a box full of tin cans and some string that we were using to support our remote workforce then. But that, I think, again, the businesses that are willing to make those type of investments that Matt referred to are going to wind up in a much better place than those who think this is all just a fad and it's going to fade away. I just don't see that. Now, do I see a complete remote work arrangements across the board? Our experience has been that probably isn't going to be the case, but it is now much more accepted, obviously, and even arrangements like this with the video conferencing, which was, to a lot of people a novelty, right? And now it's not a novelty to hardly anybody.
Yeah, it's amazing how fast tech has changed, right? 1997, I was the first person in Ohio to get a BlackBerry. If you don't have a smartphone now, something is concerning as we look at how that technology has changed. Work from home is absolutely part of it. And COVID has, oh, I said the word, didn't I? But COVID has rushed this whole process for what's there. But some people were investing in modern collaboration tools before, and some people weren't. So some companies like yours, John, it sounds like just went home and kept on doing business. But a lot of companies have really struggled to change their processes, to change their people. They might be getting it done, but it's taking twice as long as their competitor right now. And we're seeing that, as John mentioned, there are some business industries that just are almost shut down fundamentally. But there's a lot of businesses in the same industries that we're seeing a big difference between how they go after the market today.
Now the PPP loan, I'm going to go back to that one. That took everybody so far off guard. And what I got from a majority of my clients who are less than 100, they backed up and went, oh my gosh, my payroll person can't get the data quick enough, or we don't know where to find this information, and it just went on and on and on from there. John, what would you say, because we don't know that there's not going to be another assistance program, especially if this moves in beyond December 31st. What advice do you give to businesses that are really struggling to get prepared for maybe another onsite of government assistance?
So two things. In our particular situation, when we first saw that legislation come through, it was one of those deals where we read the legislation. We had our team pulled together over the weekend. That legislation passed on a Friday afternoon. We spent the weekend poring over it, looking at ourselves saying, is this real? Loans that don't have to be repaid? And once we came to that realization that, yes, this was a real thing, and we worked through, did some scenario playing about whether businesses and organizations should make an application or not, we immediately went full scale. Virtually every resource in our organization we put towards helping our clients get engaged with the PPP program. And we were involved in probably 200 loans that closed successfully. Now we're in so the advice I would give to the people that maybe a second round would be coming would be make sure that the professionals that you're relying on have the ability to get that done. Because there was a lot of prospects that we picked up in the last few months that didn't have that. But now we're in the forgiveness, the potential forgiveness period, and that's a churning waters as well. The rules on forgiveness continue to change, and where we are at in terms of recommendations to our clients that have loans is we are suggesting that they sit tight for the present moment. And there are two main reasons for that. Number one, the lenders who are the ones that are responsible for the forgiveness, accepting the forgiveness application, most of them just began accepting applications in the last week. And in this case, our advice to our clients is there's no glory to being first in line for the forgiveness part. Second, I just resurrected in the news this morning where Congress is back in session and discussion of yet another COVID package. And part of that package, part of these proposals buried in the fine print are a pretty extreme relaxation of the forgiveness provisions. So for example, one proposal is that if your loan was $150,000 or less, you don't have to do anything. The loan is automatically forgiven. You don't even have to make an application. And some other streamlined forgiveness processes for larger loans. So for those reasons, on the forgiveness side, we are recommending to our organizations we work with just to be patient. We know people are very anxious to get this handled, get it off their books, know that they have the forgiveness, but we're trying to go about that in the most efficient way for the client.
Mm-hmm. Well, and there were a lot of lessons learned in regards to banking during this time period. I heard a lot of clients call me and say, look, my bank can't take to even talk to me about this application for the PPP. Do you know, what bank do you recommend? And that is so out of my realm of expertise. But the mere fact that some of the banks couldn't handle it really helped a lot of my clients go, wait a minute, what kind of a client am I to them? So, I mean, I'm sure you heard the same thing.
That was certainly the experience. And I have to say that it was the most chaotic thing that I have been through in my entire career. And I've been doing this for a little bit, but just the fact that you had not only the SBA involved, that you had the lenders involved, you had the borrowers involved, and the rules were literally being made up as they went and changing 3 or 4 or 5 times a week. So it's certainly the larger lenders, and you know, if I had to make a broad brush, the larger lenders really struggled with getting this off the ground, and the smaller lenders were much more nimble in getting this particular program off the ground for sure. We had lots of clients experience just what you described, where no response from their lender whatsoever.
And John, I don't have the depth of expertise that you do. I only have my one example, but I can tell you you're spot on. We were with a very large bank. We turned our stuff in on Monday. That was the first day you could turn your stuff in, and didn't get processed in the first wave. So it's interesting on some of those perspectives, some of the things that we learned. And you know, we're a $10 million plus business. I have the cell phone and text number of my banker. I have that relationship, and still a lot of cases it didn't get done. But I agree, this was an unprecedented program. I hope we will never see it again, because it costs the economy a lot of money. But I do think it helped protect jobs. I do think it helped businesses make the right decision short term. And for that, I'm thankful that the funds were there to make some of those better decisions, rather than kind of knee jerk or panic decisions that could have happened from business owners.
Great, fantastic observation, Matt. I guess when you get beyond all the chaos in the process, the measuring stick is, did the program accomplish its goals, right? And to your point, I would say that for the most part, just what you described is what happened. It gave some stability to the marketplace.
I think that was huge. And you know, in IT, it was interesting. We certainly saw an uptick in some of our areas of business, and we saw a downtick in others as people looked to pull back and to save cash at that time. So even our business, which overall was okay, still had impacts from this from a financial perspective, for sure.
And John, you and your team don't just come in as CPAs for your clients. You take a broader look at what your clients are doing and help them see a bigger picture than just what's on paper that's understandable to them.
We would like to think that that's a differentiation point for us. My passion throughout my career has always been working with small to medium-sized business owners, and that is the market that our firm purposefully chose as our focus. And over time, observing the behavior and the responses of business owners and managers of not-for-profits, and listening to really where their pain points were, their focus was not on, hey, I, Mr. or Mrs. Business Owner, want to understand the tax law. What they're saying is, you know, help me. Finance isn't my background. help me weave that function into our operations so that they apply seamlessly. So that's the approach we take. I mean, we do the things that, you would expect CPA firms to do traditionally, because those are important things, right? Getting your tax return filed is a pretty critical exercise to go through. But just as one example, and again, the focus of our organization is when someone files their tax return in March or April, that should be old news. You should know where you stand in September and October so that there's no surprises. So that would be the difference in approach that we take. And again, back to the PPP, reflected in that exercise of not waiting for our phone to ring. We consciously contacted every one of our business clients to make sure that if they were interested in a PPP loan, we could get that handled for them.
So what are you telling your clients now to think about for the remainder of the year to alleviate any more bumps or bruises?
So I'll go back to what I mentioned earlier, really the liquidity part. As Matt mentioned, having the PPP money for lots of business owners. I really love that point, Matt, of being able to make decisions in a reasoned way rather than in not that it wasn't a crisis, but not as much of a crisis, to really be able to think through and have a little cushion. And that was the interesting, when we made these contacts with our clients, third week of March, the impact of this wasn't really occurring for most businesses. They're thinking, a crisis? What crisis? My phone's still ringing. I'm still getting orders. And we urge them, you need to be worrying and thinking about 6 months from now, 9 months from now. So we are encouraging conversations with their lenders to make sure that, for example, if they have a line of credit coming up for renewal, maybe that renewal isn't scheduled until January. You need to be talking with your lender now. Have you really looked at your team, and is everybody on your chart? Are they pulling their weight? The overall, to Matt's point about using this as an opportunity for process improvement. I really think that is going to be a dividing line factor of those organizations that say, we are going to use this as an opportunity to get better. I probably had, and Matt, I don't know if you experienced this with your team. I would be really curious to know, but I've probably had a dozen business owners independently tell me in some form or fashion, one thing that this crisis did was give me an insight into my people as to who I could really count on for reasoned judgment and who I'm pretty sure I'm not going to be able to rely on them. So I'm curious what your experience with that was.
Yeah, I mean, from our personal perspective, it was I wouldn't say measure that way. We're a small enough business that we kind of know, we're kind of close knit. There was no surprises, but it was interesting on who we could throw the curveball to and who adjusted faster than other people did. We've got employees across 4 states. So for us, a remote workforce is very normal. But we did have a core set of functions of people in Mason, Ohio, who were used to coming in the office and collaborating together, et cetera. And we challenged those people to go full remote. And we're very successful in doing that. But thankfully, I have all the tools in the world. And some customers have that, and some customers don't. But I have.
Yeah, that's not fair.
More tools that you can take a stick at, and thankfully, Microsoft gives them to me, which is a huge benefit that I have versus other folks.
Yeah, and I think that's probably a better way to put it, of who you could throw a curveball to. Somebody who would thrive on the dealing in the unknown versus having to have all the facts in front of them. That's a better way to describe it for sure.
Yeah. And we've had to help our customers that way. We've had to reprioritize. We had customers that said, "Oh, I have this, cloud-based phone system, and it's not real important. We'll sit on it. And I appreciate the budget for 2021." And go, that cloud-based phone system? How about Tuesday, tomorrow? Let's get it. So we had a lot of those kind of curveballs thrown at us from our customers as well.
Well, Matt, keep going on that topic. Help us understand the challenges that your clients faced and what you've learned over the last 5 months.
Yeah, so to John's point, it has been just a complete shift from the customers that are, I don't say shut down, but disengaged, to the customers that are go, go, go. The ones that were making strategic investments before are still making strategic investments now. And that's the really cool thing. So one of the challenges that we see is that sometimes employers drop off a box of tools. IT shows up and goes, boop, here's a box of tools at a user's feet. It's like dumping a box, toolbox in front of me without directions, without any sort of blueprint. Good luck for me creating anything, right? So a lot of what we do is try and take those tools, come in and do adoption and change management to actually help people figure out how to use the tools. What business cases do we have? How do we kind of execute these through? So I kind of go back to Harvard Business Review. Basically, they're saying now 80% of employees' time is basically meetings and collaborating together. 80%. So if we're not doing a great job of making that efficient as an experience, we're losing a lot of our horsepower as a business without having some of these modern tools in place.
Well, then, those are big words for people like me. Modern collaboration. What does that look like? Because this isn't my bailiwick.
Got it. So modern collaboration. So if you think about old time collaboration, it's email. Email is horrible. It's just awful stuff. What happens? I have my collection of data and it's over here and you can't see it unless I send something specific to you. You can't see it. You can't tap it. I get a new employee, a new team member come onto the team. They can't see what's in my email box. They can't see the last 10 years of history of interesting things that are there, communications with our clients, etc. So modern collaboration is using a new set of tools. In the Microsoft realm, it's called Microsoft Teams, is the core application that's there. But it's sharing data in there a lot of times by subject and allowing everybody around to communicate and talk about it. And that's the awesome part. It's not stuck in email where nobody else has access to it.
Okay, it sounds really good. How would that help the overall employee work better?
So I'll tell you a funny story, right? But I do a lot of volunteering and scouting. I had 2 meetings almost back to back. One with teenagers to plan an event, and the second right after that with adults to plan an event. The teenagers got on. They pulled up a spreadsheet. They started assigning tasks. They worked through things. We were all on the same digital screen, sharing data and collaborating. Everybody had access to it. Everybody could simultaneously edit those documents. I got done. I hopped on to my adult fundraising event committee, and it was all voice only. There was no video. They weren't collaborating on a single document. Everybody was taking their own notes. At the end of it, everybody was like, what was the date for that we did? Because nobody could see it, right? That's modern collaboration. I got to tell you, those teenagers, they did it 10 times better than the adults did.
Hey, Matt, I'll tell you a team story for us. So starting about 18 months, maybe going back 18 months before COVID hit, we started rolling out Microsoft Teams. And I got to tell you, the acceptance rate was low, but I kept my boot heel on everybody's throat and said, this is what we're doing. And that was the only way I would communicate with people. I told them, if you want to communicate with me, that's how you're going to find me.
Love it.
Is that a good platform, Matt, that Microsoft, would you recommend that Microsoft stuff?
I would. I'll let John finish the story. I want to hear how he got the greater adoption.
So the governor issued his order on a Sunday, and we said, okay, we are going full remote. Come in the office on Monday, get your stuff. Tuesday, we are going full remote. That's it. By Thursday, everybody was using Teams like they had been using it for 10 years. And I'll go one step better. Our people that had been working remotely for a couple years said, wow, now these other folks know the situation I'm in. And they said they saw and everybody in the office, even when somebody's office was next door to mine, I saw them more in March, April, and May than I did when their office was next to mine. True story.
It's interesting. In prepping for this today, I was chatting with one of my employees, and she's like, I feel more connected. We're having more of these digital happy hours. We're hopping on video more often. She's like, I feel more connected. I'm like, you used to work in the office with me.
Yeah. Same experience.
And the only funny part, John, you actually mentioned working on this technology for 10 years. Well, we have. I mean, because Teams is partially social. And so the core concepts that we've gotten used to of, thumbs up on Facebook and liking things on Instagram, et cetera, work the same way in business. I like the data you're sharing with me. I have extra comments to it. I want to make sure that this gets promoted. I want to save this data and information. So some of it's true, is that we're taking some of the social concepts that we've gotten used to in our personal lives and turned it into useful things in the business world, which is cool.
And I don't hear very many positive things that come out of COVID. I just don't. But that, my gosh, that sounds extremely positive.
I think it is, right? I mean, fundamentally, if you look at it, I was looking at one study the other day that I captured for this one, but they basically said 33% of people in 2018 said the culprit was ineffective communication was one of the reasons, the primary reason they left their job, right? In 2019, that number was 63%. It went up by 30% in a single year. So employees are demanding more and more communication, more knowledge about what's going on in the business, more knowledge about what's happening from their coworkers. And people hate having done the same work, right? I mean, how does that make you feel? You're like, oh, you already did this, you already accomplished it. I just wasted an hour of my day. There's nothing that makes you feel worse than that, right? So knowing what I need to accomplish, how I need to accomplish, getting people on the same page, that's huge. And, John was even talking through some of that with, you shouldn't get surprises from your CPA, shouldn't get surprises from your coworkers. So try and avoid those if at all possible.
So what pain points, when you're listening to a client or when you're just in a conversation, what pain points are you listening for to make these kind of recommendations?
Yeah, it's a great question. So when you ask a customer and you say, where's your data, right? What kind of data do you have? What's confidential? What kind of data do you have that if it got out, your business would be done, right? Your secret formula for Coca-Cola, that gets out, that business would be challenged, if it makes sense. A lot of businesses can't answer that. They can't answer the data that is most important to them. So it's hard for us to know where to put that. Collaboration is great, but we have a set of data that we don't really want to collaborate on, right? We have our contracts and our personal information and health information of our employees needs to be sure not to be collaborated on. So one of the very first questions I have is, do you know where your data lives and resides today? Some people say yes, some people say no. We can help them through any of those processes. If they say yes, great, let's start down the path. If they say no, we've got basically business analyst engagements to get people more aware of the data that they have. That includes everything from financials, payroll, those kind of data information. Then what we find is we try and find the people in your organization that create data. I'll go back to my Facebook example earlier. You know that one person that posts 15 times in a day? That's probably the same person that's going to post in your business. They are data creators. Now, some people are like, data creators, here's what I had for breakfast. No thanks, I don't need you, right? Or I don't need that data in my thread. But in business, I want to find the people that are data creators, that are taking this data information in and sharing it back out. So we'll take the CPA example. I have a ton of data coming from the government. Somebody's got to look at it. Somebody's got to, and in this case, post it up. But they've also, to add value, got to say, here's how we think about this, or here's our approach to it, right? So John, have you seen any examples on Teams that way where people are putting up new government communications and you guys are commenting or sharing on that?
absolutely. And that collaborative aspect of it, I'm not, for some reason, it just didn't resonate until the people actually dove into it. But once they did, there was no coming back. I mean, just the way you described the ability to Pandy in Teams, it's actually, and I'm, not a commercial for Teams. I'm just stating what the positive experience we had with it. It's actually called a channel. So you set up a channel on a particular topic, invite members, and you can share files and chat and video calls, and it's all in one spot. And that's the collab. That's I think the point that Matt was referring to.
And tomorrow you hire a new employee and you give them access to that channel, and all that data is there, right? Versus email, hire a new employee, they start with an empty email box. There is no data in that thing until somebody sends them an email, right? But as John was describing, our discussion on last week's new news or last week's change in HR, Pandy, you can have those conversations and they can be persistent. And the cool part is you can change it. So a month ago it was, go ahead and get your PPP submitted. Now we get more data and say, oh, that looks kind of a mess. Let's hold things back. We can go find that post, find that information, make a comment to it and say, let's hold off for right now, right? And here's why we're going to do that as a business.
And the sad part is it seems so simple to you. What if someone makes this kind of a change and implements this kind of major business investment? How long can they consider for a return on investment?
Oh, I think it varies a lot by company and where they can save money or time or effort, etc. But let's say I take a document and it's an important one. I send it to 10 people on my management team, or let's say 5 people on my management team, and they all make comments and changes, and somebody's got to stitch those things back together. That is just wasted time and effort. In modern collaboration, I'm going to send out a link. I'm going to let all 5 of them edit that document, and we can do it real time. We can do it together. We can see the changes other people are making. We know there's one master copy of that document. There isn't 5 copies that we got to stitch back together. If you think about that, 5 hours of time from your management team, even if, let's say, they're $50 an hour, that's ROI right there. And it's the fact that they can do something else with that time that's more important. And one of John's main messages that I heard was planning for the future. Are we thinking about what's happening? Are we thinking about what could change? Are we driving what if scenarios? And are we doing that together? Because me driving my what if scenarios isn't nearly as powerful as putting it down on paper, sharing it with other people, and getting their input and feedback back to that. So ROI is a little hard because it changes by organization, but these tools are not expensive fundamentally. The storage lives in the cloud. It's a per user per month sort of charge. I do recommend some setup and configuration, just like anything else, kind of going from that box of tools to that blueprint, to that architecture, to that finished house, if you will, as the example. But you can get ROI very, very, very quickly. We had one large, it's a alcohol brand, adopt Teams. They saw ROI in less than 30 days. Mostly because they had a distributed workforce. They were not used to work from home, and this was a net new tool for them to allow them to collaborate better and faster.
And Matt, I haven't heard you say yet that it's only limited and available or recommended for certain industries.
No, it's really not. And because, John mentioned the channel, but you have a team. A team is a concept. The channels might be, so a team might be clients for us. And then everybody underneath that's a client would have their own channel. So if I wanted to describe or talk about XYZ company, I could go into there, ask a question of a coworker, get an answer back, share news on that company, invite people to comment or to share it fundamentally. So if I worked in a different industry, I might do it by product. I might do it by project. I have a lot of different ways to set that up, but I can really customize it down to my own needs.
Oh, that's fascinating. All right, this is exactly why you're on the show. I'm going to switch gears here, though, real quick. John, I'm dragging you back into the conversation. I want you to just roll for about 10 minutes on this new update from the presidential guidance in regards to the deferral on the taxes for employees. I have been inundated with questions on this topic. And again, there's so much gray matter on this. So could you walk our viewers through exactly what the president is offering and what employers need to be considering, in regards to announcing it to the employees, or whether they should even offer it to their employees?
Certainly. So the topic at hand is a executive order that was issued by the president that is part of and I'm no scholar of constitutional law, but my understanding is when the president issues an emergency declaration, that gives any president the power to suspend certain tax deadlines. So this particular executive order gives employers the ability to stop withholding the employee's share of Social Security tax from employee paychecks, thereby with the policy consideration being an increase in that employee's take-home pay immediately. The huge caveat that is in place is that this is the order as it exists today is only a deferral of those taxes, not a forgiveness of those taxes. So the Treasury Department issued some very sparse rules about a week ago, and those rules gave some guidance, but it's clear that as things stand today, that number one, the employee remains liable for those taxes, such that beginning January 1st of 2021, the employer basically has to double up the taxes that are taken out for the first 4 months of 2021 in order to recoup those taxes that weren't taken out now. So I think it becomes probably obvious pretty quick that there are a lot of employees who that would create some issues. And the second point that is critical for the employer is that the employer remains 100% liable for those taxes that didn't get taken out now. So if an employee is terminated, leaves, for whatever reason, the employer is still the primary, has primary liability to the federal government. It's up to the employer to recoup that money from the employee. And the Treasury Department guidance that was issued was very, very vague on what that would look like. So
it would look like a mess as an employer, in my opinion. What's your personal opinion on this one, John?
We are not recommending to any of our clients to undertake this. The risk is way too high. And again, just thinking about it from a policy perspective, I personally believe that for many employees, it would be a disservice to them. It is, there are a lot, it's unfortunate, but it's a fact of the world that, a great majority of employees are still living paycheck to paycheck. And I think most of us have seen those statistics where, there's a large percentage of the population in the United States that couldn't, roust up $800 to pay for a car repair bill. And so being faced with the possibility of having to repay these amounts, and people that are in that territory, and yes, I'm generalizing, but the generalization would be, it's not like those people are going to take that money and stick it in a savings account and have it available in January. So all politics aside, this is simply an analysis, an assessment of the facts and a business decision on behalf of the employers. We are not recommending anyone to do this.
So I'll ask a question because I'm curious about this, but after an employee leaves, I don't have a great way to get funds back from them, right? Fundamentally. So I think that money would just be gone, would be my opinion too.
Yes. That's the plain, that's the in the dirt under the fingernails viewpoint. Yes. Yeah, it just is problematic from those two perspectives. So we've had lots of questions about it, and what we have found is there is a lot of misunderstanding about what the provision actually is, and there is talk. Well, there's talk from the president of the potential for forgiving those amounts, but there is very, 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 very limited support in Congress from both sides of the aisle for that to happen. So while predicting what's going to happen in Congress is a really dangerous exercise, and I'm not doing that, it just doesn't seem likely at this point that Congress would go along with, a forgiveness of those amounts. And so again, for that reason, we are not recommending to anybody to do that.
Thank you, John. That's exactly what I wanted the viewers to hear. If you viewers, if you have any questions or hesitations, and what I'm finding is that employees may be aware of this, but they're not all coming to you. Maybe one or two at a time are coming to you and asking you about this. Make sure this is something that you're talking to your CPA about. Or if you have any questions and you don't feel comfortable with your CPA or don't have a CPA at this level, maybe you're just working with a bookkeeper, call John and his team and ask them. They'll be more than happy to walk this through for you. I think another important thing to say too is when the federal government, if the federal government, it doesn't matter what division or what department, when they mandate something that the employees are to know about, they will make a poster announcement, and that will accompany the guidance or come shortly afterwards, very similar to the FFCRA. We all received the employee rights poster, and we had to put it out so the employees themselves could educate themselves on what was available and what was possible. This did not come with that. So you are not required to go out and say, have a general assembly and explain that this is available, nor are you obligated, as John said, to provide it. So think it through, please, before making a decision. It's like everything else, make sure you understand your options and then also understand your risks. Going along with that, there was a field assistance bulletin that came out here most recently from the Department of Labor and Wage and Hour in regards to how employees are to be paid, specifically more remote workers who are hourly, non-exempt. If you are not familiar with that, you might want to brush up on it or talk to your consultant or labor law attorney. But basically all it's saying is, look, you have to remember, non-exempt employees are paid for all hours worked, whether they're permitted or suffered, they are to be paid for it. So employers have a responsibility of diligence to know what your employees are doing, how many hours they're working, and at what times they're working. If you do not have a properly or sophisticated, and I mean sophisticated, way of maintaining record keeping, and it doesn't have to be a payroll program, it doesn't have to be a timekeeping system, but you need to have timesheets on and recorded hours on all non-exempt employees. That is your responsibility as an employer. And getting back to this tax deferral, remember, don't think that you can just hold out for that last paycheck and think, well, if I let them use the deferral and they decide to leave, I'm just going to keep their last paycheck and not pay them that. I'll just take the taxes out of that. That's not within the guidelines, guides. The Fair Labor Standards Act will not let you do that below minimum wage. So you can withhold, but then again, you can't withhold anything from an individual's paycheck unless you have a written release stating that you reserve the right to do that. There are so many things to consider here. So again, talk to your CPA, but then if you're going to put a signed release, get with your HR consultant or your labor law attorney to make sure that that is structurally appropriate and worded correctly. We talked about a couple of weeks ago the number of states that have stepped up and started implementing additional laws and regulations on top of what the federal government's doing. And I want to remind everyone, right now we've got 13 states, and not all the states, but subsidiaries and municipalities within those states have added additional laws and regulations with additional benefits under this COVID program. So if you've got employees in Colorado, California, Connecticut, District of Columbia, Illinois, Michigan, Nevada, New Jersey, New York, Oregon, Pennsylvania, Rhode Island, or Washington State, you need to be aware of those programs and make sure that if it's a municipality within those states, or if it is the state itself that has put in some additional laws or regulations, you need to be aware of those. You have to take and allow those provisions to the employees in those states. Just because you're located in Ohio, Indiana, Michigan, Texas, Arizona, and you've got somebody working in another state doesn't exempt you. So please be aware of that. We're seeing some things slip between the cracks, and we want to make sure that you're all aware and able to stay up on that. One thing we haven't talked about on this show are those of you who have unions. And I just came across two court cases going on right now that involve unions, where companies have had to lay off or furlough, or maybe they've had to restructure some divisions or departments within the companies, and they went outside the unions to do it. Guys, you can't do that. You need to be very, very careful of what your bargaining agreement has stated and what you've etched in stone with them. And also remember too, the unions are asking for additional information right now, whether they're permitted to or not, or whether you're obligated to provide it or not, it's not the issue. Just get with your labor law attorney, bypass the consultant on this one. And you know who I am. I'm telling you, bypass the consultant when it comes to union and go straight to your labor law attorney and have him walk you through your legal obligations, working with that bargaining agreements. You can't make decisions right now into this pandemic and think that you can get around those union agreements. You can't. So, and all this time we've never talked about it. Now we're talking about it. Last week we told you that the FFCRA program had been altered and changed. They had clarified more information in regards to how to handle the school children, and if the FFCRA programs would cover school children under the circumstances of if the schools were closed or not closed. Well, now I just have this wonderful update here saying that here on September 4th, another revised regulations were for the FFCRA have been put before the White House. Typically, we'll get it when it's publicly released, but it's going to have provisions in there that clarify if an individual is eligible for the FFCRA, if there's no work for them. Okay, remember how we said, anyways. I know you're so tired of this. The provisions that were broadly defined as healthcare provider, the provisions requiring the employer to agree before an employee could take FFCRA leave in an intermittent basis, and provisions given employers the right to require documentation in support of the FFCRA programs. This all ties to what we talked about 2 weeks ago in regards to the courts in New York who are making additional revisions and clarifications. Well, now the White House has it. So we're going to be getting some updates again. Of course we're going to tell you about it. We're going to discuss it on the show. We got your back. Just stay with us and we will help you with that. I also wanted to go back over some issues in regards to the EEO. We got a question this past week that a company got with me and said, well, I don't have to follow the EEO. That doesn't pertain to me. You guys, remember, and he was using 50 employees or more. If you have 15 employees or more, the EEOC may very well pertain to you. And the only reason it wouldn't is if you could convince the courts that you were not really an employer. So when I talk about EEO, I'm talking about all the discrimination laws. I'm talking about Title VII, the Genetic Information Act. I mean, the EEO is a big umbrella that covers a lot of information. Please do not think that that does not pertain to you without talking and going over this with either an HR consultant or a labor law attorney. EEO has changed and modified. Yes, under the pandemic, absolutely. But remember, just because the pandemic's possibly will end here on December 31st, we don't know that some of this other isn't going to stay. So be very, very careful in thinking that you've been exempt from the EEOC, because as of right now, there's a really good chance you haven't been. I know it's a lot. I normally give a training tip, and I'm going to kind of throw it back on John and Matt. Guys, if you could offer our viewers a training tip, what would it be? Matt?
Training tip, keep always learning, right? All the stuff is available online. There's always tools. I think my training tip is put it in writing, because when it's in writing, it's real, and get input from other people, because that's what makes it more powerful. Nobody's got a monopoly on smarts. Surround yourself with great people and ask them for great feedback back.
Excellent. John?
I am continually amazed at the information you can find on YouTube.
Including this show.
Including this show. But it is, honestly, it is fascinating to me about business topics, personal topics, how to change the filter in your washing machine. You can find it on YouTube. So that's my training tip.
Good. And my training tip is, is, guys, keep working with your supervisors on communication. Please make sure that you're all speaking the same language. Make sure that you're all aware of updated protocols, updated policies, updated language. Remember the CDC, FFCRA, they've all been changing here in the last few weeks. So if you are aware of the changes, then please make sure that your team is aware of the changes and that you're all talking to your employees in the same state of mind and with the same language. That is so important. Right now, at a time when we're all afraid of what's going to change next, or we're all unaware of how it's going to affect all of us, we all need to be on the same team and on the same map to getting through this. Matt Schrockman from Interlink. John Kirsch from Kirsch CPAs. Guys, thank you so much for taking time out of your week. I encourage our viewers, if you have any questions at all or would like to talk about something in more detail, you can reach both of these individuals. And if you need their contact information, Matt, what's your email?
Best way to get me is interlink.com or hello@interlink.com.
Oh, easy enough. John?
KirschCPA.com, all one word, or jkirsch@KirschCPA.com.
And I'm Handy Pridemore, Principal Consultant for the Human Resource USA. Thank you so much for being here. We want to thank ICRC-TV for one more hour. And viewers, we want to thank you for being here. We're trying our best to get you what you need. And without your feedback, we have you're just at the mercy of whatever I want to do. And that could get dangerous. So until this is all over with, thank you for coming. And we'll see you next week.